All right. Are we ready? Yeah. Amazing. So first of all, I want to thank this panel. This is truly really good examples of utility in Web3, something that is really concerning for us in Valor as investors, and I think in general, in a bear market. Where is the real value in Web3? I think here there's a really excellent opportunity of talking about real use cases. So we're going to focus this panel on that. So let's first start with a little introduction. If you could please just briefly introduce yourself, please.
Hey, I'm Nikhil, Head of Strategy and Innovation at the Cello Foundation. Previously went to Wharton where I got my MBA in 2019. Most of my work at Cello, so Cello is a layer 1 blockchain, heavily on a mobile architecture. Core facets really being on payments, real-world oriented DeFi, kind of community currencies and social impact use cases, and then lastly, climate. A lot of our work ends up being in emerging markets. A few folks here we actually work closely with. So yeah, I'll stop there, but we'll definitely talk more.
Hi, everyone. My name is Anna Stone. Thank you to Penn Blockchain for inviting us today. I work with a project called The Good Dollar, and The Good Dollar is all about how do we actually make this new era of digital, decentralized public finance accessible to the 1.7 billion people around the world that are currently unbanked and the 5.5 billion people around the world that are underbanked, and how can we actually use this new paradigm of public blockchain networks to address that problem that plagues our current financial services industry and drives a lot of the lack of equity that we see across our world. The way we do this, or the way we've approached it, is actually through developing a protocol that provides free money as a public good or universal basic income called UBI. We have a standard for distributing free crypto UBI every day to anyone who wants it, and therefore enabling people to begin to use that currency and that money to transact peer-to-peer, do more economic activity than the money that people have left over in their bank accounts, if they're lucky enough to even have bank accounts. Good Dollar has been active since 2020. We've onboarded over 500,000 people from every country in the world into not decentralized finance. We have around 50,000 daily active users, 100,000 monthly active users who actually claim Good Dollar every day and use it to do all sorts of cool things, peer-to-peer, both offline and online in DeFi.
It's really hard to follow Anna, by the way. And Good Dollar is doing a great job with global UBI. I'm very, very happy to be a Good Dollar partner and a user. My name is Clanthea. I'm a co-founder at Masa, and I am part of the Penn family because my fiance went to Penn. So very happy to be on campus today and just seeing everyone here. This is such a high quality conference and a great panel that we have today. So what we do at Masa, we are building and powering soulbound tokens for Web3. Probably very few of you have heard of soulbound tokens, so let me explain a tiny little bit and we'll dive in more.
We'll get to that.
Okay.
We'll get to that.
So it's a mystery. Just remember it's NFT 2.0 and you'll listen to it in a bit, but so far, just NFT 2.0.
I'm very curious to hear more, so I will keep it very short. So hi everybody, Thomas, founder and CEO of Credix Finance. We're a protocol that provides access to credit in Latin America. We're live today in Brazil, Colombia, and Mexico, and we are connecting investors all over the world with credit opportunities to finance SMEs, individuals, and corporations in these markets. We have launched the company about a year ago. Since then, we have provided $30 million in financing in those markets, ranging to hundreds of thousands of individuals and SMEs. And I'm sure we can talk more about it later on.
Amazing. Okay, so there's two things in DeFi that makes it generally hard, in my opinion, which is one, UX, just usability, is very hard. I know how many of you here in the audience already uses a wallet and have tried to use your crypto in different applications, but in general, it's hard. And the second thing is liquidity. Even if you have an amazing UX, you need liquidity, right? And all of this cross-chain enigma, monolithic versus modular, like what's the path towards something that actually can bring value and like make cost-efficient applications compared to traditional finance. Because the philosophy of it is amazing, but at the end of the day, especially in emerging markets, we really care about usability. People, this is a need in emerging markets. I come from Argentina, for instance, and we don't really care about, well, we do care about the philosophy at the end of it, but at the end you have to pay the bill, right? So let's start with usability and UX, UI. And maybe I'll start with Thomas here. Even if you're B2C, you're helping companies to have something that makes them more efficient and then serve their customers. So at the end, you're impacting a lot of people. Why do you think in emerging markets is so hard specifically?
Yeah, so emerging markets in general is the Wild West, right? So I think where we look at like providing access to financing, first of all, is like a lot of the people, the individuals, the SMEs there, they might not have like a regular bank account. So in crypto, we often speak about the problem of on-ramping and off-ramping, meaning taking your fiat money and getting that into the blockchain-based ecosystem. But if there is no bank account for those individuals or SMEs, there even is no off-ramping. So it starts with an initial problem. Secondly, everything we're doing, moving money, creating investment and credit products, are securities. These are investment products. These are tokenized investments. Now we're doing this in a cross-border way. So we need to take into account the legal regulation compliance infrastructure, not only from where the investor is coming from, which might be the US and under SEC scrutiny, but it might also be for the local laws. So we need to locally work with the Brazilian government, the Colombian government, the Mexican government. Now, something very interesting there starts to happen. If we take the example from Brazil, there we have actually seen that regulators are more open to work with companies like ourselves because they actually see the need of bringing in more foreign capital, access to capital in these countries. The Central Bank of Brazil has just recently launched a tokenization program for debt in which credits will take part. They have launched a real-time payment system called Pix. They are looking at launching their own digital Brazilian real. Only those 3 projects already is doing a lot more than the US that is now focused on, I heard like they want to forbid staking and that's what they're focused on. Instead of like providing true value adds and using the technology as an efficiency. So whilst on one side you have the complexity of cross-border and a lack of local infrastructure, we also see that there is a big push from regulators and from the local communities to support the technology.
Amazing. I think that pretty much summarizes an advantage that emerging markets have, sometimes with the governments that and central banks adopting the technology. At the end of the day, as Thomas says, one of the things that will enable liquidity, for instance, is being able to plug in jurisdictional constraints into whatever protocol you're doing, smart contracts, etc. No? So thank you so much for that. Yeah, sorry.
Can I raise my mic?
Yes, actually I was going to ask you something. Yeah.
Yeah, so to your first point about the challenge of building an emerging market unbanked population, that's something that the reason why we actually started Masa in the first place. So like many on the panel and probably many in the room as well, I'm an immigrant here in the US, first generation. When I first moved here, I had 0 credit score. And because of that constraint, I was not able to get a loan and build my financial history in this new country. This is not a very singular coincidence here. Across the globe, there are billions of people who are credit invisible. And what does that mean? That means that they might be creditworthy. However, their creditworthiness is not accurately captured in the traditional banking system or financial system in their jurisdiction. I think one magical side of DeFi and Web3 is that you're able to create truly a borderless structure whereby you bring liquidity on chain, and then you're able to welcome borrowers from all different kind of countries. I'm sure like many countries that Good Dollar operates in, and then help them tap into the on-chain liquidity space. At Masa, we have a emerging market credit score that basically help SOBON tokenize your creditworthiness in emerging country and help you tap into the on-chain credit pool.
So people here wonder, like, what's the real use of an NFT? You know, like right here. You know, this is an excellent example of how NFTs can be used really to increase adoption and in something that's super useful. Argentina, we don't have a credit score, basically. Like, I also came to the US and had to start from scratch. So, I mean, I think that's super interesting what you're bringing. And then, can you explain what Soulbound token is and how can NFTs be used to increase adoption?
Yeah, so finally, to unveil the mystery that is SOBON tokens, we normally call it SBT, but SOBON tokens as a concept was first introduced by the Ethereum creator Vitalik in May 2022 paper called Decentralized Society, Finding Web3 Soul. At a very technical level, it is the atomic representation of your on-chain identity. If that sounds too theoretical, let's break it down. Remember NFT? The art that you create, the membership card that you have, the badge you have to represent your membership, loyalty, and preferences in Web3 culture. What if we make it non-transferable? So it is a piece of identity card that is tied to you as a unique individual. Then that becomes a SOBON token. At Masa, we built a protocol-level abstraction that manages the attribution, aggregation, and management of all the data points from off-chain and on-chain, including credit score, and make that into a SOBON token, which is your on-chain identity. So that's SOBON token.
Amazing. So now I would like to get into the philanthropy level and how can we get value from transactions to help populations that are underserved, especially interesting topic for emerging markets. And here I would love you, Anna, to give some context on how are you doing this in Good Dollar, and also what's the difference between what you're doing with other projects like Proof of Humanity and things like this.
Sure. So, I mean, I think...
What is UBI? Explain what is UBI for us, please.
Sure, I'll start at the top. So I think at the macro level, you would think that cryptocurrency is not progressing if you only lived in the United States. And the reality is that crypto adoption in the hands of real people is increasing year over year, depending on the country, but it's happening in countries that are outside of the US and for the most part outside of advanced Western economies. And you have to ask yourself why, right? Why is that happening? And I think that, you guys gave some good context for that, if you will, right? Which is that in places that don't have very advanced payment systems, in places that don't have advanced capital markets, there is a lower opportunity cost for crypto to come in, and the willingness of businesses and regulators being willing to work together to actually close that gap, because people recognize that there's a tremendous opportunity to improve that and to advance the economies in those countries, right? I guess the further down towards the bottom of the pyramid you get, the more of a challenge you have in terms of reaching consumers, the more of the challenge that you have in terms of creating a business model that actually could make sense to operate with those consumers.
And just to interrupt you 1 second, Thomas mentioned something that is true in Brazil. For instance, during COVID, there was a lot of initiatives coming from the central bank to increase formality, just bringing people to the financial system so that they can access credits and other sort of things. And one of the things that they were promoting is, okay, you have a digital wallet or you have an account in a Nubank, for instance, and you get to claim this prize, right? That is an initiative. So I think now that you're talking about bringing people into the financial system so that they can have a better condition, better life, can you explain universal basic income for us, please?
Sure. So the concept behind universal basic income. I'm sure many of you guys know it from the 2020 presidential campaign with Andrew Yang, or was it 2016? I don't even remember. I'm like, what's time? But the concept is that any individual person gets a baseline unconditional income just for being a human being. This is an idea that has existed for decades, actually, centuries, and has, been, I'd say, adopted by a number of technologists and futurists as a key topic in terms of how do we come with, what is the role of humanity in terms of coming AI and what that means for jobs and labor markets, and universal basic income certainly had a moment during the pandemic, and realizing that, people need money to live, right? And not only that, but it's based off of the principle that if people have a certain amount of financial security, they are therefore enabled to better pursue their purpose, which ultimately leads to better economic outputs.
But with Web3, for instance,
Yeah.
how do you make this happen that would be more complex with Web2? I mean, what is maybe
So I
explain
think-
what
I think
Good Dollar
there's-
is doing differently,
sure.
just to
So
go
I
to the
think-
point with this.
Totally. So we have, Web3 changes the paradigm for UBI in that you're able to deal with two big problems. One, how do you get money to people individually at scale, right? And this is something that traditionally has been, quite frankly, impractical, because all bank accounts, all financial accounts, if you have them, are within centralized private systems owned by banks and financial service providers. Think about how difficult it was even in this country for people to get their economic impact checks, right? There's no system to distribute money to people individually as individuals at scale whatsoever. The second component is, how do you pay for it? Right? How do you actually pay for something like this? How could you pay for it sustainably? And one of the incredible things about the blockchain infrastructure is that because it's distributed, because it's decentralized, you actually don't have the same infrastructure barriers, you will, in terms of sourcing capital from many, many, many different sources. And so for the Good Dollar model, for example, we actually play with this concept of earnings and fees and all of this money that's being generated across these networks, microtransactions, and funneling those earnings and those microtransactions towards a productive universal basic income that's distributed widely. And so the concept is that there are new models within which corporations or individuals can actually begin to use, say, runoff fees, donated earned interest, flip taxes for NFTs, all sorts of sources of money exist in crypto. And how can you channel it in the most productive way possible to actually reach the people who need that money the most? And so our model is a combination between this paradigm shift that now anyone in the world can have an on-chain wallet within which they can directly receive money, and then a token model, a protocol that's designed to actually funnel money from a gazillion different sources across decentralized finance through a common system that enables people to access those funds and begin to use it, in the wild.
Amazing way to englobe what we were discussing before, no? Identity, bringing sources of capital from different chains. So talking about chains now, Nikhil, what does it take to be the layer one of emerging markets? What are you doing differently? Why should everyone in emerging markets use Celo?
Yeah, so earlier, one of the first questions you asked, right, was there's liquidity and there's usability, UX. And so we've kind of seen kind of two aspects of that. First, from like the actual usability component, our hypothesis has always been that long-term people will actually want to do most of these things on a phone. And so building a blockchain that essentially facilitates that. So for us, it was, how can you actually have something that's able to work not just on like an iPhone, like the latest iPhone, but can it work on a low-end Android phone? That's one. Two, how are you thinking about the actual bandwidth that's needed? So can your phone, your Android phone that's not the latest Android phone, can that still interface with the blockchain even in a location in which you don't have great connectivity? So that's the second one. Another component is around like how are you essentially mapping phone numbers to account addresses? So at the end of the day, you should actually be able to just use your phone number to link to that. And how do you have a decentralized structure around that? So those are some like initial components of a technical stack. But then also I think long-term, the way we've thought about it for Celos, and I hope, if you guys didn't go to it, actually it probably would have been a really helpful talk, is we have a very multi-chain thesis and the idea of interoperability, that capital at the end of the day, right now we kind of see it locked into specific locations. But long-term, capital should be able to flow across different ecosystems quite seamlessly. You actually have a really good opportunity for that in a blockchain standpoint. So a multi-chain design around having partners like Axelar and Hyperlane who spoke earlier today, they're some of our really close partners because we see that capital can flow across different groups. So that's on a technical side. Then on the actual like user experience as well, it's thinking about what are the partners that you have in the ecosystem. So for example, one of our close partners is IDEO. They have a group called the Last Mile Money program. They've specifically worked in the Celo ecosystem to think about how can you make design easier for different applications. So basic things such as like, should you really have to click multiple times on to confirm a transaction? That's something that most people actually, we don't really do in any traditional application. Is it easy to go from, let's say, a Celo blockchain asset to M-Pesa in Kenya? That's something that's quite important, especially we have a group that is essentially an e-commerce platform in Kenya for about 40,000, 50,000 users, and they partnered with different businesses. Can people seamlessly be able to go from CUSD to M-Pesa, vice versa? That's really important. And then I think it's also the ecosystem in terms of what are other projects doing and where does expertise lie? So you'll see that, in our, like what I found oftentimes in our ecosystem, there was a really good example yesterday where one project is launching their platform and they sent out a message saying, hey, are there any kind of Spanish kind of projects based out of Mexico? Because we need some translators. And you had a bunch of people all jump in, all talking about, oh yeah, we're doing this, we're doing this, we're doing this. So you start having that ecosystem of expertise.
Amazing. Let's now switch to some more spicy questions and also hopefully create opportunities for even partnerships in this panel, no? Why not? So first thing for Nick Hill, how can you facilitate cross-chain liquidity for real-world lending?
Yeah. So let's take an example here. Let's say you have...
I'm sorry, and I want to reiterate on something that a lot of people think about layer ones is how much money is actually locked in the protocol, and this is a big concern. A lot of people throw protocols off by saying, oh, they don't have enough liquidity. So, I would like also you to explain why this that you're going to talk about is an example of something that matters in liquidity cross-chain and how you solve it, and how does compare with things that don't actually need, like the example with the farmers that you mentioned. I think it would be interesting for you to briefly talk about that.
Yeah, so a good example here is, TVL is a metric that's often thrown around, right, regarding any DeFi protocol. So TVL is really great if you're depending on what it's being used
Total
for.
value locked.
Sorry, thank you. Total value locked. So Uniswap, for example, or Curve, two protocols that are known for having some of the highest value locked out of any protocol in all of crypto. And it really just means that people have deposited a lot of assets in there for facilitating swaps. The same way that a centralized exchange like Coinbase holds a ton of tokens on their back end and they're able to facilitate those swaps. So total value locked is a really important thing if you need to actually use that protocol. But in the case of a lot of like real world finance use cases, in some instances it's really important. In other ones, you're actually thinking, there's actually ways of thinking about cross-chain liquidity. So an example here is one of our partners is the Grameen Foundation. And so they have
What, sorry?
The Grameen Foundation.
Okay.
So,
Microfinance.
Yep. So Grameen
Microfinance.
Foundation is a large microfinance organization. So they provide microloans to different communities around the world. It's traditional lending. And they have different microfinance institutions that are subsidiaries and partners all around the world. One thing that they have to do is any of these financial institutions needs to hold some amount of collateral in the case that there's defaults, right? You can't have all of your money flow out. You want to have some of it there. So one thing we've been working with them on is, can they have a collateral fund that's sitting on chain? Why would you want that on chain? You'd want it on chain because let's say you're a microfinance institution in the Philippines. The access of capital that you have in the Philippines is going to be limited primarily to your geographic region, which means you'll probably have higher interest rates and less money flowing in. So in the case of something like a cross-chain component, what you can have is you're actually not even at that point limited to only kind of assets flowing in on the Celo blockchain. It's actually how can you go from a blockchain like Solana, where Credix is sitting, or Ethereum, where someone can say, I can actually generate yield by lending to Grameen on the Celo blockchain, and you're essentially facilitating that capital flow, and you're using cross-chain token bridges, essentially, examples such as like Wormhole. So that's where you're actually seeing capital flow across different chains.
What do you think about this, Thomas? And like, what's your pain point, or could be your pain point sitting only in Solana? Like, how do you solve that?
No, definitely.
Also, please, would be amazing for you to talk a little bit more about how are you integrating with institutional investors like Apollo? I think that's already, we can announce it, no?
Yeah, definitely.
Okay.
Before I answer that, I'm going to go a bit rogue here on the panel. So I think two things important. So I think you always hear a lot of terminology being said during these kind of panels, like TVL, real-world assets. Like in the world of DeFi and blockchain, they like to make up their own words, but it's nothing else than like assets under management or a digital asset. So it's not really something totally new.
Love
they
that.
just give it like a new name. And then secondly, it's like, okay, why are all these people who are sitting here focused on emerging markets? What is like the big opportunity there? And I think for those who have not lived in underserved emerging markets, that might be difficult to grasp. Because here you use your Venmo, you can connect to your MetaMask on your MacBook when you come home, you open your bank account, you get your loan, you have your credit score, you have your American Express, and everything works actually pretty well. In these markets, it's different. They cannot get access to like stable store of value. They cannot like move money in and out of the country. They don't have like an identity that is recognized by the government. Let it be something that is recognized cross-border. So all these core primitives that the people here are building are necessary to truly build like a new kind of financial system that is global and on-chain digital from the beginning. And the decentralization and the blockchain is only a tool to get there. And that brings to the cross-chain question. So with Credix, we are built on the Solana blockchain. We love the Solana blockchain. It's very high performance, it's very low cost, it works perfectly for everything that we do, and we can move money from A to B. Are we married to that blockchain? No, not at all. Because what is our goal? Our goal is moving money from an investor's pocket into the pocket of somebody who really needs it in Latin America. And if that needs to go through the Ethereum blockchain because there indeed yield can be generated, or the Celo blockchain because they have the partnerships already and it's mobile first and we can get it immediately to the farmer, immediately to the retailer, then it's our responsibility to facilitate that. And that becomes then a technical issue. And those technical issues indeed are being solved today and being covered by, I think Nikhil already said it, you now have layer 0 and wormhole and all these technical aspects that are bridging value from one chain to the other chain. But from a user experience perspective, we want to abstract that away.
Well, what's the example with the farmers in Colombia, for instance? Can you tell that?
So for example, like a very good example, so we're going to be launching like a big new project next month in Colombia, where we're going to be financing $150 million for farmers in Colombia. We're going to do that through a distributor of fertilizer. So when the farmer comes to buy fertilizer, which is very important for them to make their crops grow, at the point of sale, they will actually be able to get a digital loan through Credix. In the back end, we are integrated with Apollo Global, $500 billion asset manager, looking to provide a lot of credit. And so they are integrated on-chain and they will immediately provide that financing. In this case, it all goes through the Solana blockchain. But there could be a case where it's, for example, Apollo that now wants to finance the microloans on Celo. And so we will have to provide that as an abstraction layer to get to the business value that we can bring.
I mean, you have already facilitated over $30 million, right, in credits. Is this kind of the approach you have to scale? Because now you have all of these other projects that need money. How are you going to scale? What's your plan to scale Credix? I mean, this is a $1 trillion market, people. Like debt and credit is a super big market. So I'm
I have to jump in for a second, which is just to say that I want to really put into context how remarkable it is what we're talking about in terms of what the credit market in crypto, right? Because credit in crypto, savings and loans has, drove DeFi summer and drove the explosion of DeFi protocols. Aave, Compound, Yearn, like these became the blue chip DeFi protocols, but they were focused on a very particular use case, which was DeFi lending, right? Which was very much focused off of speculative investing. And credit is the long game, right? We can talk about how big of an opportunity credit is, but what's been missing in this space is actually connecting, okay, what are the protocols that enable people to autonomously make deposits, take loans, et cetera, and the real world use cases for why people borrow money, which is actually consumer spending or healthcare spending or making investments in their business or agriculture in this case, right? And so there's been this tremendous disconnect between what's the potential for these protocols and how could it solve problems around access or around, connecting capital to people who really need it. And to see this happening in a real world use case where Apollo, which is as institutional as it gets, is actually using crypto infrastructure to deploy capital directly into the hands of productive individual farmers. It's a huge moment that I think the industry needs to appreciate, so congratulations to you.
And as a follow-up on that, and the spicy question for you, how are you planning to scale people donating so that you can have like more money locked for the UBI? At the end of the day, the UBI is taking money, like a percentage of the yield, right, from staked assets and putting that in disposal for people that are applying into a white list so that they can get this daily or monthly payment, right? So how are you planning to scale that?
So I think
maybe linking with what you were saying about the farmers and all these corporations, like how do you make that?
Yeah, I mean,
I
how do you convince people to put money into what you're doing is a very challenging question for all builders and entrepreneurs. But I think in our use case, we come to it from the perspective that one, there's a lot. First, I'd say I think of two things. One, I think there's a lot within the traditional philanthropy and donation model that people around the world who are mission-driven and work in impact recognize is broken, and there are opportunities to improve those around areas of, how do we get money into the hands of the people that need it the most effectively, the most efficiently, with the lowest cost of overhead, right? There's a lot of opportunity to improve that from the philanthropic space. I think the second component that I try to remember is that at their core, most people want to do good, right? And so most people don't actually want to win at the expense of someone else losing. They really want us to all win together. WAGMI, remember? And that if people are given opportunities to actually, create wealth in a wider context that benefits the other populations more widely, that they will do so. And I think cryptocurrencies and tokenomics create a lot of new pathways that on an individual level, in a corporate level, that people can actually use their capital to support wealth generation that they enjoy, but also benefits others. And this is not just philosophical, it's actually practical, because you can design the systems and the code and the money flows that enable you to do this in new ways that literally isn't practical or possible given the centralized financial infrastructure.
Could UBI become something like a carbon credit or no?
I think ideally you would have all of these different systems benefit one another, right? So you would want that. I think about this all the time. How is it that someone could actually buy carbon credits and a percentage of that benefit would go to fund UBI, right? Or how could you have real-world assets that are linked to climate preservation actually within the reserve of a currency like good dollar. So as natural resources are preserved, that value actually creates more value that's distributed as universal basic income in the system. So ideally, that's the concept of regenerative finance, which Cello is working so hard on, is that, or refi as it's being called now, is that how can we actually use all of these different technology and financial primitives in new ways that enables us to create more value that's not just economic value, that's also environmental value, social, etc.
Amazing. Nikhil, any comment on that?
No, actually, I think I want to hear Clancy on some of those pieces because we were talking about this earlier today.
I was expecting the spicy question, by the way.
I was going to get to, she mentioned some applications of the carbon credit, and I wanted to give Nikhil the opportunity, but I'm going to get
I do want to make a quick comment, though, because one thing that both Thomas and Anna said really resonated with me is about Web3 being innately global as an ecosystem. Think about it. If you're building a new SaaS tool in the US, you would think very hard about how to go to market. You will have a playbook, yada, 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 yada. Eventually, you achieve some sort of market penetration. However, when you're building in Web3, especially when you're speaking to the community, aka to consumer directly, it is truly innately global. So then you have to think about what you can actually provide to them as value. I'm very proud of every single panelist here because we're really striving very hard to deliver real-world utility to the global community.
So the spicy question for you would be, let me think. Yeah, how can we leverage soul-bound tokens, for instance, our identity, to create, I don't know, better KYC that is compatible on chain, or any way of, because Thomas mentioned something that's super important, at least important for government, which is, we have this jurisdiction, so certain investors will be able to put money on this jurisdiction. So there's a local component of it, even though we want to dream of this as super global, there's always going to be some local component to it, because every country has different credit profiles, So the spicy question would be, how do you help underwriting of data to enable global credit market, for instance? Or how do you link the capabilities of going local with the soulbound to enable this global liquidity?
Yeah, so I'll probably say two things. First of all, we'll analyze the usage of soulbound token in the credit market. And then I'll probably talk more broadly and more abstractly about how to use soulbound token to increase value in the global world and generating, hopefully, real-world utility. So in the first case, which is credit, the big problem that Thomas mentioned previously was the fact that a lot of people are unbanked and their credit invisible in the world. Using soulbound token, what we basically do is that we collaborate with data partners in different markets. For instance, in a couple of weeks, we're launching an emerging market soulbound token that is going to provide credit score to consumers in Kenya and Nigeria using data sources such as their M-Pesa record, their loan payment, their mobile data, their et cetera, to analyze their credit score. And then soulbound tokenize it, meaning bring it on chain to help them tap into different kind of soulbound lending pool and take a loan, not from their local financial institution, but from the global concept of on-chain liquidity pool with some of our partners. So I think in that way, we're trying to bridge the off-chain data, which is very restricted in certain jurisdictions, bring them on-chain, and then help them to tap into the more global on-chain liquidity pool that we're collectively building on this panel.
So, guys, we have 3 minutes left. I would love to give the audience an opportunity to ask questions. Maybe I'll take 3 questions and keep it short so we give it on time. Yes? Sorry, is there any microphone in the audience so we can... Okay. All right. So is this being recorded or no? Yeah? Okay. Can I ask the question?
Yeah. Are you originating the loans, or are you working with originators?
So we work mostly through origination partners. So the origination partners that we work with can be like local fintech companies, non-bank lenders, microfinance organizations, or distributors, suppliers, like the Colombia example of the fertilizer. And so they're really, the blockchain and the decentralized aspect as a tool also helps, because you really build a network, an ecosystem of originators. You bring them on chain first. So to the scalability question, we start with B2B. Then we provide the financing to the consumers, the individuals, the SMEs. And the next goal is to bring them also on chain. But it's really a matter of scaling through those partners.
Amazing. 2 more questions? There.
You talked about loans with farmers. What do you think about the future of commodity trading being tokenized and being decentralized, and how that might work?
I think just in general, from my opinion, it's like the whole financial market and even non-financial asset markets will be tokenized and should be tokenized over time. And I think it all comes back to like, how do we really start creating global infrastructures where access to assets, to financing, to capital, to data, in the end what it really is, becomes more efficient and fairer from a global perspective. I think commodities in specific are a very good use case, and I think a lot of things are already being done. I think even on the Celo blockchain there is some things happening, right?
Your last question.
First, thanks so much for to the panel. At least within the United States, there seems to be sort of a crisis of trust at the moment with respect to crypto. And I wondered if any of you had any thoughts on how that can be addressed and sort of improved upon, not just in the short term, but perhaps more long term. Thank you.
I think we all probably have something to say on that subject. I don't mind starting, and Nikhil, if you want to.
We have like 1 more minute, so let's just whoever peaks it.
I think what is unfair in the real world right now is really the lack of fair value exchange. And blockchain makes it a lot more transparent through the use of token and Soban token. I think at the core, that's how we solve the trust issue.
And I think we have to do better in terms of what are we emphasizing? Are we emphasizing kind of like the actual, like a value of a token, or are we emphasizing the use case? And if we're primarily just focusing on the value of a token and the question of when token go up, that's really the wrong narrative that we're trying to take forward. And I think that's really what we're reckoning with now.
Amazing. Sorry.
I have a little bit more of a cynical perspective, actually, which is that I think that people, you know, for the most part, 2 sides. One, I'd say that I've worked in this space for a long time, and there are more people now than ever working in Washington, working in offices of regulation, working in positions of power that understand the power of decentralization, and actually decentralization as a feature. And that is something that gives me hope, right? Is that despite what we actually see happening in the regulatory environment, there has been real learning that's happened across policymakers and across in that space that gives me hope that over time, you know, for those of you who saw Hester Pierce speak yesterday, there are people who know, who understand, who want to advocate for decentralization as a feature and understand the benefits that it brings, and she's not the only regulator. On the flip side of that, I also think that that's not the long game, if you will, and that we need to focus on, which is a shame because capital formation and ownership in this country is a real problem, right? To say that inequality or lack of access and lack to generating wealth is not a problem in the United States because we have advanced capital markets is a lie. And so I think we have to remember that like what's maybe proven out first overseas, ultimately, at least for me as a builder, I think about how do we bring that back home? How do we bring that to the Bronx? How do we bring that to under-resourced countries all over the world, or all over this country? But I don't think that the examples start here because the operating environment is just simply too difficult.
Amazing.
Give me 10
We're-
seconds.
we're running
So
okay.
I think really
10
important
seconds.
is like when you saw the bull and the bear market in 2017 and when it was broken, when we did conferences like this, and I was there, the room was empty. There was nobody there anymore. Now it's different because people like us and people like here in the room are building real world applications. And as long as we do value creation and the consumers and the businesses are here and seeing the value in that, then I feel that the regulators will follow. They will follow where the money is going, where the value is being added, and where real businesses are being built.
So go and build real world applications. Hands together for this amazing panel.
Thank you.
Thank you.
Thank you.